Hey guys, Bob Ruding here with the Mortgage Solutions team, and today I'm going to do a video about the number one question I get asked, whether it's on Facebook, TikTok, email, text message, you name it, and that is, what are mortgage rates? And I always compare this to if you picked up the phone and called your local car dealership and said, how much is a car? Think about that for a minute. How much is a car? What do you think the person on the other end of the phone is going to say? Well, what kind of car are you looking for? Are you looking for an SUV, truck, car, two-wheel drive, four-wheel drive, power windows, power steering, like leather? What is it that you want? Well, a mortgage is very similar. It would be like, so the billboard that you see on the freeway or the internet website that you see that's quoting an interest rate, that's an interest rate designed to make their phone ring. That's not an interest rate necessarily that you qualify for, and that may not even be the loan that you want. Truthfully, it might have mortgage insurance. It might be interest only. Like, there's so many variables. So when you're shopping for a mortgage, there's a lot of things to take into consideration. I tell people all the time, do this. Call somebody you trust. It doesn't have to be a mortgage lender. Call somebody you trust and ask them, hey, do you have a good mortgage guy? I've been doing this 23 years. I've seen a lot of it. I get phone calls daily from people that went with their friend's neighbor, their family member that just started. I mean, it's great to help those people out, but when you're dealing with the biggest financial purchase of your life, you're gonna wanna use somebody that's seasoned and reputable and knows what they're doing. And so I've kind of itemized, and we'll say in a nutshell, the mortgage calculator and how mortgage rates work, what to look for, what not to look for. And I'm gonna go through this really quick, and in future videos, we'll discuss each one in depth, but I got a minute to wrap this up. So let's do it. So when you're applying for a mortgage, the first thing a lender looks for is credit score. What is your credit score? If you've got a 600 credit score, your rate is gonna be different than an 800 credit score. Loan of value, how much equity to have, how much down payment do you have? If you've got less of a down payment, your rate's going to be higher. If you've got property type, is it a single family home? Is it a condo? Is it a condo-tel? Is it a non-warrantable condo? There's a lot of different variations, and each have an interest rate adjustment. Occupancy, is it owner occupied? Is it an investment property? That matters. There are rate adjustments. Debt to income ratio. How much is your outgoing debt versus your incoming debt? There are rate adjustments. So you started off with a rate of 5%, and you had a credit score adjustment of 3/8, a 1/4% adjustment for loan of value, a 1/4% for property type, and a 1/4% for debt to income ratio. Your final interest rate is going to end up at 5.875. You saw 5% on the billboard. Why is my rate different? Well, there's a lot of factors to take into consideration when you're shopping for a mortgage. There's a lot of unknown factors that you may not know when shopping for a mortgage. So what I always tell people is what I told you earlier: pick up the phone, call somebody you trust, call somebody that knows what they're doing, that's been doing it a while, that will shoot you straight. They're going to give you the best advice. And obviously, it's the biggest purchase. You want to make sure you do it right.